Okay, traders, I'm just looking at the S&P 500 here, the E-mini futures chart, and this is trading into a really important level. If we look left, scrunch up the chart, we can pull a line through this current price range. Okay, back here, balance area on the daily, through here, the resistance, support, resistance. Right, so this is a really important level between here and, well, the high and the low of this range. All right, so you can see how the market has reacted off this level previously. Right, so that's one thing. So this is an institutional level. This is where big money is going to be looking to work their orders, basically. So big money buys at a discount down in here. Now this is trading into this level. Not only, has this been visited multiple times, we've got this range or these candles here prior to this bearish move sets up buy side liquidity, right? So this is a significant liquidity pool that price is currently chewing into. The natural reaction when price moves into a level like this, well, look at the reaction here, for example. Everywhere you see when you look back, yeah, well, I mean, around here, off here, it pushed off. You'll see that there's been a significant move. Look at it. So it trades up into here, it sells off. So that's worth considering. Definitely, you want to take that into consideration. Now, here's the other thing. So this price range from the low to the high, all right, is our current trading range. Now, in terms of this being a bullish trend here, this is currently trading at a premium. The discount zone is under this 50% of this Fibonacci range. All right, so it's currently trading at a premium. You don't want to be buying at a premium. Now, given that this is trading into a resistance level like this, I'm expecting this to pull back. And I'm expecting it to, look, here's the thing. See this range, this low to this high, all right, low to high. Look at the pullback. Look at the pullback from that high down into 50% and to 61.8. So this red and blue zone on my Fibonacci is key. 50% pullback, guys. Look, everywhere you look, right? Here we go. Look, high to low, pull back into equilibrium there. So the market generally will expand and retrace. So I'm expecting a move back down into these levels. So this is a daily chart. It could take days. Who knows, right? Be careful because, they're going to be, look, if smart money accumulated down here and they're looking to unload some of their position, they're going to need, this liquidity, and they've got it. So these orders can pair with these buy stops that are sitting up in here beautifully. Right, so let's just go down, say, to a 1 hour time frame and have a look at price action. Be careful. I'm expecting this to, I'll just grab a pencil. I'm expecting this to range, and by doing that, it's going to engineer liquidity above and below in the form of stop losses. Now, there'll be a lot of traders both buying and selling at this level. So we get a buildup of stops above and below here. And I'm expecting, if this is going to pull back, I'm expecting the high here to be taken out. So watch out for a bit of a wake off. I'll keep this as basic as possible. Possible distribution level. Watch out for the fake out, shake out, right? There's your spring. And then you get the displacement. I call it the fakey shaky chart pattern. Fake out, shake out, right? They run this, the algos run it down, and it builds more liquidity as traders worldwide sell on this movement, and then they'll take it back up and take out those stops. That allows them to pair their orders, and then we get the pullback. So, look, again, I'm not going to be looking to buy at this level. For all I know, it could trade further north, but eventually, at some stage, it's going to do this, and it's going to pull back, and it'll be a significant pullback, definitely, without a doubt. It's just how the markets work. So whether this range, and this distribution happens here, a higher, Who knows? But be careful. Watch out for this. I mean, look, this is a prime level, given that there's liquidity here for this to pull back. All right, so just be careful. It could push up aggressively, and then we drop back. What else can I say about it? That's my plan of attack. I'd be waiting for this to break structure, as in, we have a trend. Let me just grab this. Look at the trend, by the way. By the way, I don't know where that came from. Look at the trend. Look at the trend. It's currently trending up higher highs, higher lows. Break of structure would then set up lower highs and lower lows, okay, on the other end of that. So we get this rotation, something like that. Okay, guys. Look, that's my take on the S&P at the moment. Just be careful. I'm looking for a counter trend when it sets up, and then I'll be looking to potentially buy again. If it pulls back down into my Fibonacci zone, see, we've got a little bit of a gap down in here that it's kind of been touched. Okay, just looking at this gap, it did come back down into it, but yeah, I would really appreciate it if you comment. Definitely leave your thoughts and share your ideas. That would be awesome. That's my take on the S&P, and I hope you have a fantastic day. Safe trading. See you in the next one.